Good afternoon. My name is Yosha Jones, and today is July 28th, 2020, and we will talk about the real world financial statement analysis of Apple Inc. So let's get into it. The overall financial health of Apple Inc. is pretty healthy. They're amongst the top in their industry. If we take a look at the vertical analysis here on the right, you will see that the distribution of liabilities and equity for both quarters is pretty much evenly distributed. There was a slight increase in non-current liabilities and a decrease in stockholders' equity, but not too much of a variance. We could also see that the company Apple appears to be very liquid. Their current assets is about 143, and their current liabilities is about 96. So 143 over 96 in order to compute the current ratio, it's about 1.5. So Apple can take care of its current liabilities of maybe about 1.5 times, and we can see that their liquidity is further supported by their high cash and cash equivalents and marketable securities balance. Apple has a great amount of strengths, more strengths than they do have weaknesses. Essentially, the liquidity of Apple works to its favors in terms of creditors and investors judging whether or not they are safe or a risky investment. Apple has the money to easily manage its debts, so it's a safe bet. They also do successfully keep their expenses low. You can see for the quarter ended March 28th, 2020, they had a net income of about 11 and net sales of about 58. 11 over 58 is about 20% quarterly net income, so that's pretty good. They also turn over the inventory very quickly. The inventory turnover is cost of sales over average inventory, and we could say cost of sales is about 36,000. And we can see the average inventory for the last two quarters is about 3.6 or so. So 36,000 over 3.6 is about 10. So essentially they went ahead and turned over their inventory about 10 times. That's pretty good. Now, one of the company's greatest strengths happens to be also one of their biggest weaknesses, and that is that they operate globally, meaning they have money coming in from all over the world, meaning that money coming in from all over the world is in different currencies. And when they reconcile those currencies into American dollars, they lose money via foreign currency translation since the American dollar is pretty much stronger than everything else other than the euro and like the Swiss dollar and so on and so forth. Now we go to the trends, and we can see from the horizontal analysis of the statement of operations from December 28, 2019 to the quarter ended March 28, 2020, that there was a huge drop off in net sales, cost of sales, gross margin, pretty much everything. Revenues are down. Now, the bright side of that is that expenses are also down, and this is primarily because of the COVID-19 pandemic. Essentially, people have less money to spend on luxury such as Apple products, so consequently, everything goes down. But again, it's not too bad. It's an extraordinary event, so we can pretty much just neglect that. Um, and assume that Apple would have continued upwards had this pandemic not ensued. Moving on, we can also see that Apple continues to increase its spending on R&D, and essentially that is because they need to go ahead and continue advancing their technology. We do see that they did decrease the amount of money spent in selling in general and administrative expenses. Now that is addressed in the company notes, which basically also state that they increase their spending on it And that is because they need to go ahead and continue to acquire highly talented human capital, such as programmers and market executives, and that is in order to maintain their competitive advantage. So even though it states that their spending decreased, that's again because of the pandemic. They're not paying as much people. And they did have a large increase in common stock, although that could be a one-off considering it was through the new issuance of stocks, and that could have been Apple's attempt at generating some type of financing through equity instead of through debtors. So overall, Apple appears to be a pretty strong company and a safe investment to creditors and investors. So I do appreciate the audience and I appreciate the time that you've given me to explain this here presentation. Stay happy, stay safe, and enjoy.